So hopefully you're pretty excited that we're going to be finishing off the accounting cycle. I know I am, because I wanted to start on the merchandise inventory videos, and before we get to that I actually had to finish off this last presentation regarding closing entries. So where we left off last time was temporary and permanent accounts, which is going to help us understand how to close those temporary accounts. So if you remember from last time, those temporary accounts are our red accounts, which are revenue accounts, expenses, and dividends. So how are we going to get rid of these balances? Because that's what we need to do for these temporary accounts. Well, what we're going to do is, for instance, if we have $5,000 of revenue, and you kind of remember that revenue does have a credit balance. Well, what we're going to do in order to bring this balance down to zero is we're going to do the opposite by debiting revenue by $5,000. That way, we're going to have a final balance of zero, and our temporary account will be zeroed out. So that's exactly what we're going to do in this tutorial. We're going to clear those temporary account balances and transfer them to a permanent account, which you know now is retained earnings. So let's get on that. And I actually created some balances for this presentation. I have an income statement with revenues, expenses, and I actually do want to put up that dividends for this tutorial are going to be $1,000. Let me just put that up here at the top. Dividends are 1,000. Alright, so how are we going to actually close out these accounts? Well, we're going to do them in a specific order. We're going to first close out revenues. Secondly, we'll close out expenses, and then we're going to close out our last temporary account, which is dividends, last. So let's do this. Let's start with revenues. So revenues have a balance of $10,000, and if you remember, revenues have a balance that is credit. So in order to reduce revenues down to zero, what we're going to do is we're going to take revenues and debit them $10,000. This way, they have a balance of zero in this account. Now, what's going to be our credit entry? Well, revenues have nothing to do with expenses, but revenues actually contribute to net income. So we're going to transfer the balance in revenues to net income, or our account, which is called income summary. So income summary is net income. We're just transferring the revenues to income summary or net income for just the meantime. Now let's close out our second temporary account, which is expenses. So expenses normally have a debit balance in all of our expense accounts. So we're going to credit them. So we're going to credit each one of these. You can't just summarize them and say expenses are credited. We're going to do each one of them. So salaries, expense will be credited, or I should say salaries expense will be credited for what, $1,500. We'll have utilities expense being, oh, I forgot the S, of course, expense, oh, I forgot the S in both of them, wow. Expense being credited for $400, rent expense being credited for $600, and finally amortization expense, I'm just going to abbreviate this last one, being credited for $2,000. That way we have reduced the balance of all these expense accounts to zero. And where are we going to transfer them to? We're going to transfer them to that net income account again, which is called income summary. But why are we debiting it this time? Well, expenses bring down net income. So in total, this is what, $1,500, $2,000, $3,500, $4,100, and $4,500. So that's going to be $4,500 a debit. And what you'll notice is that if we have a credit of $10,000 in income summary and a debit of $4,500, this will equate to a balance of $5,500, which is our net income. You see, it all kind of fits together. Now what are we going to do now that we've closed out these two temporary accounts, revenues and expenses? Are we going to do dividends? Well, we're going to do dividends in a second, but first we want to do one thing, and that's we want to take this net income and actually transfer it to our permanent account, which is retained earnings. So if we have net income and if it's actually positive, retained earnings is going to go up, right? And if we have a net loss, retained earnings is going to go down. So since net income is positive, retained earnings is going to go up, and whenever retained earnings goes up, we credit it. So retained earnings is going to be credited for how much? It's going to be credited for the net income amount, because we're retaining all of that earning amount, which is $5,500, and the income summary account will be debited for $5,500, and that way the income summary account will have a balance of 0, because if it had a credit of $10,000 and then we debited for $4,500 and $5,500, that equals $10,000 and it will have a balance of 0. That way our permanent account has the balance of all our temporary accounts now. Now the last thing we need to do is dividends. Now how are we going to do dividends? Oh, actually I might want to say quickly that if net income is actually a net loss, this will be flipped, or it will be the opposite. And what I mean by that is we would debit retained earnings and credit income summary. Alright? This entry right here is for net income, and the opposite would be for a net loss. Now the last one is dividends. So if we have dividends, retained earnings is going to go down, right? Because dividends are taking some of that earnings and distributing it to shareholders. So how do we make retained earnings go down? Well, we're going to debit it. Retained earnings will be debited for $1,000, which I've stated up here, and dividends, that account is going to be reduced down to 0. That way all three of our temporary account dividends will have a balance of 0, revenues will have a balance of 0, expenses will have a balance of 0, and we'll be ready for the next fiscal year to actually start calculating new balances. Alright, so that's exactly how we close these entries. This is all you would do on a test or quiz if they asked you to close the books. Alright, so that ends our accounting cycle series. I'll see you when we start talking about merchandise inventory. Make sure to subscribe, and I will see you guys in the next one. I'm sure you guys have questions regarding accounting topics or our videos, so make sure to tweet us at #iNinjaNotes, like us on Facebook to receive updates or to share any quick anecdotes about how our videos might have helped, and like always, thanks for watching us on YouTube.